Hello traders, Damien here. Just wanted to make this little quick video on the trade I took today, specifically because there were a couple of questions asking why I went long when the expectation was a new structure low. I don't make a habit of doing this, but occasionally there's enough breakdown in the order flow and enough breakdown in price action that leads you to a very fair assessment that the expectation at hand may fail and that it makes sense from a risk-reward standpoint to trade against that. So I'm going to again make this video because I can be more detailed than I could be in a post or in writing a bunch of stuff out on a chart and posting it. I think it would have more value to you, and it's something that you can refer back to time and time again to help you understand breakdown and help you understand when it's worth trading against the expectation. So when I got to the chart here this morning, it was pretty much like this, where it wasn't pretty much like this. It was back here. Yeah, this is where price was pretty much when I got to my chart this morning. So we'll go through. This is where I took profit yesterday on the trade. Very profitable trade. But aside from that, we're going to, or Friday, but we're going to say that the market here is coming down like this, has made a weak new structure low, made a short-term new structure high, and then came down and made a very weak new structure low, and the market came up, and where the bears should have come in, failed. Okay, and overall made a retest of these highs and made a new structure high above this, and pretty much was kind of unable to trade back down. So I knew there wasn't a whole lot of strength there, and my expectations on whatever new structure low the market may produce would be very weak. And as the bears came in, had a lot of volume in these candles, it really didn't go very far. And what they did was they retested this low, okay, and then we had the market come in and some pretty decent volume tried to come back into this market and take price higher. So what that told me was that between this high, this low right here, and this low right here, there was pretty good interest from a buyer standpoint to come in and try to take price higher. Okay, and there was a lot more volume here, even though it didn't get very far, to suggest that this area is gaining strength. Okay, I didn't care how far back this area goes or if price found a lot of support here in the past. My interest is now. I'm trading the now, so I don't care too much about long-term history. Okay, so coming into this chart, I see pretty good movement, very weak bulls, weakening of the bears, strengthening of the bulls, the bears trying to hold on to this, not being able to, and then price break further. The bulls then gained momentum. What happened to this ability to drive price lower? Failed. So I see a transition between sellers and the buyers, where the buyers are gaining strength and the sellers are losing strength as the candles progress, as time progresses. Okay, and then they throw a pretty good pass here. Okay, and they're unable to get past this low. This tells me that although, okay, my expectation should be a new structure low, it also tells me that that expectation is weak, and if I do get that new structure low, it shouldn't be a very strong one. Okay, but nonetheless, I didn't get short here because I'm asleep at that time. So when I get to my computer, I see what's happened. Okay, I assess this. I see that there's stronger volume than I have seen in any of these, but although we didn't get very far yet, and that's understandable, we did have some pretty significant volume trying to push price lower here. However, they were unable to capitalize on this volume as they were unable to make a new structure low. Okay, so based on the fact that we got some really good volume coming in here from the buying standpoint, and we found resistance in where there's short-term structure, our expectation nonetheless is for a new structure low. So it becomes important for us to understand and see what the bears actually achieve here, and if this area actually holds. And because price got here, okay, when I got here, this rectangle had not been drawn yet, and once I got to the 930 candle where the market opened, I use this, and I didn't quite get to the bottom of that, but I found this as a significant area where price did try to find some pretty good support, and some buyers came in with some pretty good strength off of this. So once I saw this, okay, it was important for me to see what the bulls actually achieved here, okay. And what's important for me to see from this reaction off of this is I want to see a very deep correction here, as my expectation is still for a new structure low, okay. So once I see price come back into this area here, I see, wow, excuse me a second. I said, wow, price really came back, tested almost 100% of the swing. What happened to the bears here when they looked like they were pretty much able to counter that bullish impulsive move here, or to try to take price higher and produce a very weak new structural low? I expected a deep pullback, which I got on good volume like I had here before. But what happened to the bears here? Looks like this may be fading away. Nonetheless, I didn't take the short here, as now my expectations are even weaker for the bears. Doesn't make sense to trade into an area where the buyers appear to have some pretty good capability to stop the bears and to produce some pretty good volume candles here. So now my expectation of the new structural low has become very weak. I actually expect that expectation to fail, but I'm looking for a deep correction in trying to get along here into that expectation. Okay, why am I looking for a deep correction? One, that would be my expectation for the bears to try to achieve that new structural low or retest these lows. But I also want a deep correction here, or an attempt at a new structural low, because it gives me a better risk reward profile for anything that I would choose to take against the expectation. Okay, very important. So as price comes down here, I see that I did want to take the long here, as we are in an area of structure where the bulls came in, where the bulls came in, where the bulls came in. So this is a good area. But more importantly, I see that the volume that we had here and here, which was met with a lot of buying pressure, just wasn't really there. It took 1, 2, 3, 4, 5 candles, really take price down here in a whole lot of time. I mean, we're talking 42 to 53. It took like 10 minutes to get price to come down here. That's just normal. Now I understand, I might have been on the wrong contract. I usually don't change the contracts over till the very last day, which is Wednesday. But it looks like I may be doing that, because I did look at the 6/16 contract, and it does have a lot more volume into it. But that's another issue. And I was still a little unsure as to what was going to happen on the next candle. I do have great rotation. I did trade lower than I wanted it to. I have told you on the rotation, I don't like to see price trade very much below its open in this particular situation. It actually did. It traded pretty good. It traded below the low of the previous candle, which I don't like to see. So I need a little more information. Okay, and now the next candle comes down, sort of like an inside range candle, very bearish in contrast to this one. Okay, but then what happened here is this candle does not trade below this one. It erases more than 50% of the previous candle, engulfs it, and then it closes at a very high, near 100% of its overall trading volume. Now this entrance for me was a little expensive, but it was worth the risk. It does give me a clearer picture of a possible higher low here, expectation of a new structure high beyond this, and a failure to the downside. My stop was literally right below this. Now I did draw a fib of this, okay, and I want to show that to you. I'm in the golden zone, okay, in line with structure, in line with confirmation from a price action standpoint that very strong buying occurred at this level, which was reconfirmed here. This is a very safe area. My stop was literally 3 points below the bottom of this candle, which was just below the 786, which is also important for me. Okay, and I took the long here on the next candle open. I got a little bit of a bad fill. This candle initially tried to trade, it did trade higher, and then it tried to come back down a little bit and wasn't able to. I traded 20 contracts, just kind of split them up a little bit since there wasn't a lot of volume here. So it did split them up a little bit, which is okay. My stop was literally below this. My plan was to get to a break even at the test of this area. Why this area, not this area? Well, it didn't give me enough room. I felt pretty confident with all of the buying interest here that I was going to get at the very least to this area. So I wanted to give my trade that much room, okay? And what happened was price came up. It stood in this little area here for a while, and I did consider getting to a break even sooner. But what I did was I removed half of my risk. So instead of risking close to 20 points, which what I was risking, I was risking about 10 points. So it wasn't that bad, and I was prepared to take that risk. Okay, I'm going against an expectation here. No matter how good price action looks in my favor, you are still going against the expectation, which puts you at about a 70% chance of getting it wrong and being on the wrong side of the price action. So you need to manage these trades with a little more aggression. Okay, so as the trade progresses here from a bar by bar perspective, we're doing very well here. We see some selling pressure here that's met with some buying strength, and they counter that and they counter that. But we're starting to see where the bears consistently, where they've come in the past, that they're able to make a little bit of a statement here or put enough pressure against the buyers to want to create interest in selling here. So that was a little bit of concern, but I did expect price to get hung up in this general area as price has in the past. But my expectation at this point is still what? A new structural high. Because what should price have done if this was going to make a new structural low? It should have done it in the swing. Okay? Or the bears should have come in, not allow the bulls to come up 100% to the highs here. So now I'm feeling even more confident that we are in fact going to get that new structural high, and that we've possibly failed on that low expectation of that new structural low. So at this point, I need to be patient with this trade. I need to understand that there is very little volume in this on this contracts or today. Today's Monday. Sometimes Mondays are a little anemic, but you have to manage your trade and deal with the information that you have. Okay. This candle concerned me. Okay, but I still feel confident that we were going to get a new structure high, and that I did not have to worry too much about this. I'm protected either way. I'm prepared to lose 10 on this trade. Not too bad. Okay. Now this candle gave me a lot of confidence, as price did not trade very far below the open of the previous candle here. Did not trade very low this. I would have expected, in contrast from here, a very bearish candle. We did not get that. We got a very bullish candle in comparison to this one. It traded near this high. It closed at 50% of its overall volume. And although we do have some selling pressure still here, we see that the sellers are pretty much gone. And I wouldn't expect to see a bearish candle after this. You could see a intra range between here and an inside range candle, slightly bullish. Okay, and instead we got a very bullish candle. Never attempted to trade below its open. Closed 100% as top, completely traded above the high of all these candles here. So this is a very good indication. This is where I went and moved in and locked into 5 because of this structure area here. This structure area here, I locked in 5 points here from my entry to make sure that if we did find some strong selling, that I would lose nothing on this trade. Okay. And the bears tried to come in here again, and this was an area where I thought, well, looks like price may find some resistance here, and I may be taken out here. After all, what did we produce? We produced a new structure high in the short term, retested this swing, which is the important swing, because a close above this line, which is why I drew it across, a close above this would signify to me that we are in fact achieve a new structure high. The previous expectation of new structure low is no longer valid and voided, and now we would expect price to eventually try to make it back into this area here, which I identified prior to my market open. So now I identified clearly this area as a very strong support area. This area is a very strong resistance area. So I want to be aggressive with my trade management here, as my expectation was for the very least at 1-to-1. So what I did was I drew a extension of this, and I see that I have the 127, the 138 in confluence with this area where price has had difficulty trading above and should offer some resistance. So I'm particularly interested in looking to be aggressive once price gets here. Now I've always said that once I get price break above a structure area, I expect a 127 extension. That's my minimum expectation of price. So I expect price to get there. Okay, and once price gets there, I expect price to try to find some resistance. Now when I have that in conjunction with real structure here, okay, it becomes an even more critical area for me to try to, because I can always get out of the trade there and wait for the correction and get in at a much better price. Okay, but instead price does this. Okay, so once price achieves this, okay, I immediately move my stop to right below this candle here, because it is such an important area where the bears came in and we're able to actually make progress back to the downside. So although I have strong momentum here and I do have increase in volume, particularly on the second half of this swing, I do want to protect my profits. Okay, at the height of this, I was up close to 50 points, and I did not want to end up with a break-even trade or significantly reduce profit, especially when it took me 46 minutes, to get to this point. It was pretty painful waiting all that time on a trade. So I wanted to protect what I had, and I wanted to be aggressive in this particular area. And the next candle, boom, takes me out for 39 points. Now at this point, what am I expecting? Well, the bears came in here pretty strongly. I didn't expect a deep correction back down here, but I did expect price to get at the very least to this area or this area right here. Okay, and at which point I wanted to consider a long. It was getting close to the end of my trading session. It took a hell of a long time to get this trade to finally complete. I didn't want the rest of the session to be the same way, to be stuck in this trade all afternoon. However, once price achieved this huge strong candle here, I was like, wow, price is in an area where I expect the bulls to come in, and this would be a good area to get long on a rotation of price. Price does achieve the rotation. Okay, but at this point it was already 11 o'clock, which is my quitting time, and although this looks really nice for a long, I chose against it for the two reasons: that one, it was past my trading time; two, these candles looked pretty aggressive and looked pretty menacing as to being able to achieve price movement to the downside. In consideration to what happened here and what happened here, I did not feel comfortable about taking that, even though it was in line with the expectation of the pullback that we should get and with the rotation that we should get. It was a nice entry, but it had higher risk, and because for those two reasons I chose against it. But I would have, knowing if I would have taken this trade, I would have been extremely aggressive with my stop placement, put it just below this area here, because of the added risk. Okay, so nonetheless, the expectation would have been for a new structure high. Price did eventually achieve that, did a retest here, some more volume here, and another retest of this area with some nice movement here. It's pretty clear from a price action standpoint that we should get a new structure high, and price eventually goes ahead and to complete. And now asking yourself, had I been long here, what would have been my expectation from a harmonic standpoint? Well, there's a couple of things you could do. You can draw an extension of this, okay, and you can also find the harmonic expectation. Okay, now I could draw this, and I could draw two separate swings here, but this is the clear low and this is the clear high as we broke structure here. So this is a clear high and this is a clear low. So I come here and I draw this, and I remember I said don't be afraid to project things forward. Okay, don't be afraid to project price action forward. Okay, you can also, if you feel more comfortable with this, that's fine. Okay, price gets near this area, immediately 127, right? I expect on a clear break of a high, I expect at least a 127. What do we get? 127, 138. Those are exhaustion points. Okay, They happen time and time and time again. It doesn't mean we're going to get a reversal there, but you should expect some sort of exhaustion, and the resting party being the bears here to try to make a move. Okay, price came back to where? To an area of structure. Okay, where are they likely to find support? In the area of structure. Okay, and now price is going to move higher into the completion of the harmonic 1-to-1, the 1618. So I don't understand these people that, you know, spend all this time taking data, manipulating it just to say that Fibonacci's don't work, that they're inaccurate, or harmonics, that they don't work, that, you know, traders, those are traders that don't know how to use the tools that they have. Those are traders that don't understand the tools. It's easier to bash something that you don't understand than it is to learn how to use it properly. It takes effort. So I wanted to make this video to help you understand why I went against the expectation, how I managed this trade, why I took profit where I took profit, and had I been looking to get back in, where and why I didn't take that long, because I don't want you to say it's easier to say that in hindsight. Well, I didn't have the benefit in hindsight. I had an expectation, and I didn't like the strength by which price came into my area of interest. Although we had the good rotation, it was also outside of my trading hour, my trading time span, so I did not take that for those reasons. I try to be as disciplined as possible, and in light that it took such a long time for my trade to not only materialize but to get to profit, I didn't want to get stuck in a similar situation, even though price moved significantly better towards the second half of the day than it did so in the first part of the day. So this is a little short video as to how I handled the price action today. Tomorrow I will be on the 616 contract. I will be doing another live trading session with you guys probably towards the later part of this week or early on next week. A live streaming session like we did last time. And for those of you that want to create more space between that are using NinjaTrader and don't want the price action to be completely on the side here, so you can give you room to draw fibs, kind of like I do it, where you can see you have a margin here. You just right click on the chart. Oops, go to right click. What's going on here? Right click on the chart, go to properties, scroll down here where it says margin, right side margin, and put whatever number you want in there. I have it set at 200. This is the space that it gives you. The more you put there, the more space it gives you, the less, obviously less. It's just a little free zone there where you can still draw fibs and not have it interfere, not be completely towards the right side edge there, to give you a little bit more room for you to do your bar by bar and all that good stuff. Okay, that's all I have. I hope this little video had value to you. We are going to be discussing very soon in the next couple of days money management, and then we're going to get into some of the harmonic patterns, the ABCD, the Gartley, the bat, crab, butterfly, those patterns on an individual basis. I'm going to make one short video on each one, and how to identify it, how to qualify it, how to trade it, and pretty much that's about it. I'm not going to be actively looking for a live trading situation on the pattern itself. I am going to be identifying it when it's already there, and show you what it looks like in the price action and how to identify the proper anchor legs and all that good stuff. All right, take care guys, good trading, and I'll see and speak to you guys soon.